Good morning, everybody. How y'all doing? I'm in the Discord voice. If anybody wanna pull up in the Discord. How y'all doing? How y'all doing? How y'all doing? I got me some toaster strudel here. That I'm about I left the icing on top of it, so it's super melted now. Y'all gonna have to excuse me for eating on the stream, but I'm hungry as a hostage. What's going on, man? How y'all doing, man? How was y'all night? How was y'all evening? How was y'all Monday trading? How was y'all Monday's trading? As a quick recap for anyone that's not a part of the gang, I shared a post in the Discord, basically for the mentees, like any new mentee, should I say, explaining how the concepts, the ICT concepts, can be used for trading options. Also, before we get into that, hello, how are you? My name is Timothy Lee Rogers Sr., and if this is your first time tuning in to Tim's Tidbits, I'd like to say welcome. However, if it's not your first time tuning in to Tim's Tidbits, I still want to say welcome. But I want to give you a nice hearty thank you for always tuning in to Tim's Tidbits. Now, let's get into it. Before we get into the overnight price action, I shared a post in the Discordia yesterday for the new mentees. Y'all said y'all like it like this. For the new mentees, where did I share it? Screenshots. I said, hey, mentees, and everyone that don't know, the concepts also work for SPX options. I marked out an entry on the ES chart at the CE of this bearish fair value gap to go long to the buy side liquidity. But I actually placed an SPX call order, meaning I put in a limit order in my platform to buy SPX call, right? Meaning, because I was right here, for those who don't know, going long on the ES means I anticipate the S&P 500 to go up. If you anticipate it to go up and you're buying options, you want to buy a call option. If you anticipate it going down, you want to buy a put option, right? The way you remember that is you called someone up, and if you got something in your hand, you put it down. So if you want it to go up, you call. If you want it to go down, you put it down. That's how you remember that. And then I had the initial target as the swing high inside my right? So I wanted it to go to the buy side up here at this green on the ES, right? And with options, it play out a little different. So the target I was shooting for in the options was the swing high, right? And when I initially placed the order, the price on the options chart at this swing high was $2, right? But price started to consolidate on me right up in here when I got picked up right there. Then it started just hanging around for nothing, right? And so I changed my target from $2 to 85 cents. And I had the executions here to show them, this is what I did. All right. So the concepts work because price is price. So for people who be like, I don't trade futures, you don't have to trade futures to use the contracts. I mean, use the concepts. You can use it for trading options. Now, I know you're going to ask, Tim, does it work on all? I don't know. Price is price. So go and test it for yourself. I trade the S&P 500. So that's what I know it works on. Does it work on Apple? I don't freaking know. Maybe it does. I got friends that says it do, but I've never done it myself. I've never researched it myself. I trade the S&P 500. Thank you. All right, man. What's up, Laverne? You got something you want to say, Laverne?
No.
Oh, you don't? Okay. I saw you pop in. I thought you had something to say. All right. Let's get into the price action. Oh. For anybody who wondering, this is the one from yesterday when I was like, I got in at the CE of this. And for those who don't know how to use the projection tool on TradingView, when this is how I prepare to get into a trade, right? If I see a place that I want to get long or get short, for example, yesterday, right here, price was going up, right? We were inside this bearish fair value gap right here, right? This is a 1 hour bearish fair value gap, right? And price was drawing toward the buy side. So I'm anticipating this to be an inversion fair value gap, meaning it's a bearish fair value gap, but I'm anticipating price to push through it and then buy off of it, right? So as we're going up, I see this little price leg right here that's inside this dealing range right here. And I'm looking at this as a balanced price range, this area right there. So I map out this price leg and I say, okay, this is the equilibrium of the price leg. Okay. And I'm looking at, we're inside this bearish fair value gap that I'm anticipating to be a inversion fair value gap. So I want to not be greedy on try to get the best entry. So I'm going to just take it on the CE of this fair value gap, and I'm going to give it to the bottom of the fair value gap for me being wrong, right? So I go to my little projection tools, right, and pick a long position, and then I click it on the screen, and then I put in, remember I told y'all you put in your account size, how much you want to have in your account size, or like your drawdown or whatever. You put like the amount that you're willing to risk on any trade, and then when you drag it out, it shows you how many contracts you can use. And in this case, you could, for this trade right here, I could have traded 2 MES contracts based off of the risk tolerance for this trade right here, right? Could have traded 2 MES contracts, but instead of trading 2 MES contracts, right, when price came down to the CE of this, right, and it was hit, actually, I put in a limit order for a little less than the price that it would have been when it hit CE right here, because I was giving it to come to the discount of this range. So let's, like, when it came to CE right here, the I think the price of the contracts was like 60 cent, right? The price of the contracts was 60 cent. So I put in a limit order for 40 cent, because I was like, if we come to the discount, that would definitely pick me up, right? And so it picked me up. I got in at the 40 cent, and I was giving it to the low of the fair value gap. If we went below the low of this fair value gap, then I was gonna close out the trade. Now, when I'm doing SPX, same date SPX contracts, I just do a manual stop loss, because the SPX price moves so erratically. I've learned, like, over time, I told my wife like a couple years ago, if I'm trading SPX on the same day contracts, I can't put in a stop loss, right? What I do, this is just my way of doing it. I only buy contracts with the amount of money that I'm willing to lose if it goes all the way to zero. Right? So if I'm willing to lose $100 on a trade, I'm only going to buy contracts that's less than $100. Right? They got to be less than, if I'm willing to lose $100, I don't go and buy a $500 contract and then put in a stop loss for $100, because on the SPX it moves so erratically. I was getting stopped out every single time, and then it goes in my direction, and I was losing money because it moves so erratically. So I changed my strategy. I only buy contracts for, and this is for the same, because I only trade the SPX on the same day. And so I only buy contracts for the amount that I'm willing to lose, right? So if I'm willing to risk $100, I only buy contracts that's less than $100. So if I'm willing to lose 100 and I see a contract for 60 cents, right, for that's $60, then I'll say, okay, I'll get that contract for $60, and I'm willing to let that go all the way to zero if this trade is wrong, right? But I'm watching here, like when it comes down, if it goes past my invalidation point, then I'm like, okay, I'm wrong, and then I'll just get out the trade then. Even though it might not have gone to zero, that I use a manual stop loss, because I'm like, okay, I'm wrong, and I just get out the trade. But if it never hits my stop loss, I don't care if it dwindle. Like yesterday, I got in this for like 40 cents, right? And I had my initial target for $2, because the initial price of it, I mean, the target price was going to be $2 if it went to that high, right? But by the time it dilly-dallied and it's a same day expiration, now it's almost the end of the day, right? So I say, hey, I'm not going to get that $2, right? So I switched it to 85 cents. I was like, I can get 85 cents out of it. So I switched it to 85 cents. And at the end of the day, when it took off, I think it, and you see, like at the end of the day, you see the price came all the way up here, well past this. Now, this was initially $2. And then by the end of the day, it went way up there. And I'm talking about all within the span of an hour. It went all the way up here. But I think the max that contract hit was like either 95 cents or $1, somewhere around there. It was nowhere near that $2. So me deciding to just go for 100%, because from 40 to 85, that's a little over 100%, right? Because that's why I put 85. Because if I put 80, I'm not gonna pocket 100%, because you got the commissions. So I always go a little over. So that's my math ain't mathing. Somebody that's good with math in their head, go ahead and type that in chat what it is. But 40 divided by 85. Nope, I should have put 85 divided by 40. Is that right? Oh, I know what I got to do. 85. The market is open. The market is open minus 40 equals. So 45 divided by 40. It's 113%. That's what it is. The market is open. The market is open. The market is open. If you're going to trade, please trade safe. Hold on. The market is open. The market is open. The market is open. If you're going to trade, please trade safe. If you're not going to trade, please take a copious amounts of notes so you can go back and study what you saw today and apply it to your future trading endeavors. And I was not calling you out. To the mentee who said I called you out for trading, I was not calling you out. I was just making a statement. But my grandma said, if you throw a rock up under the house, a hit dog will holler. Now, back to the overnight price action. Okay. I talked about a million things today. And then you see here, this was a trade idea earlier that I had. I was looking at this 15-minute fair value gap here with an entry, giving it to the low. I got this alert set here, because I think if we break this, it's going to flip bearish. So I want to know when we break that. But the idea was getting in on this 415 BISI at the high of it, giving it to the low of it. And as you see, price came down, looked like around CE. If I hover right there, they look like CE. Let's check that. I don't want to just eyeball it. Yes, right there, boom. Price came to CE and then pushed up, and that's the buy side right there that I was talking about from yesterday. We finally took it. We have made these equal highs. And no, we made, this was the equal high right here. That was the equal high there because the buy side is way back over there. Yeah. So we made this equal high right there at the 5 a.m. candle. And so that's why I was eyeballing that with this as the information. And so you see, we came down with the fake me out SIBI there. That SIBI, all it did was send it down to a discount. That wasn't sending it down to sell off, right? That's one thing you never want to get caught up in, right? Oh man, y'all can't see my screen. Why y'all ain't tell me y'all couldn't see my screen? I ain't tell y'all could. Discord saw the screen. I ain't gonna go back and reset it. I ain't gonna go back and reset it. Y'all want to tell me, y'all want to pop in the Discord and be like, Tim, we can't see your screen. And so you're not gonna go back and reset it. I'm sorry. I'm sorry. Okay, I'll reset. Okay, so rewind. Hold on, let me get a piece of my toaster strudel. And a sip of my almond milk. Ooh. All right. So we this right here is the equal high that I was talking about from the buy side that we was looking at yesterday. Right. So and as you, if you don't know what I just did, I just marked out the two equal highs. That's the high we made in London. That's the high from the buy side that I was talking about yesterday. In this trade right there. All right. So during the London, we got Le Judas, and then this right here, what I was saying was the fake me out SIBI. You don't want to get caught up in stuff like that whenever price makes equal. When you got smooth highs, if you got smooth highs or smooth lows, and the price is bullish or bearish at that time, you don't want to get caught up thinking that this SIBI is going to push us all the way down to this low, right? There's nothing wrong with trading this SIBI back to a discount, because if you look at, if you're advanced enough to trade up and down, if you look at this SIBI is in the premium, right, of this dealing range right here. So there's nothing wrong with trade, like when price came down to equilibrium and push back up here, there's nothing wrong with trading this down to the discount. Me personally, I'm not going to take that trade because price at this time is bullish and we came to a discount. You know what I'm saying? What's to say that this wasn't going to be a breakaway gap and price was going to just keep going up? So me personally, I'm not going to take that trade back down. I'm not going to sit here and say, hey, see, you could have traded down and traded up. No, I'm not taking this trade back down. Why? Because I like to trade from internal to external liquidity. That's my personal trading style. I like to go from the internal liquidity to the external liquidity. All right. That's how I like to trade. But as you see in hindsight, this worked out. That wouldn't have been a trade I would have taken. But I was saying, don't get caught up in this thinking, oh, we're about to drop to there. Why? Because we just came up and made smooth highs. That's the algorithm's favorite trick tactic to get retail traders, right? Where it'll go and touch a high or low, make relative equal highs or lows, and then the retailer is going to say, hey, what is the retail mindset going to be? Interaction time. It's time for a teachable moment. What will the retail mindset be if you see we got this high over here. Let me move this stuff out of the way. What would the retail mindset be if you see we got this? God dog it. Get out of here. We got this high right here, and then price trades down, trades back up, and then we get hit that same spot again, and then drop off like that. What will the retail mindset be about this area right here? What are they thinking? Resistance. Exactly. Resistance. They're thinking that is resistance. But as a smart money trader, meaning you're in sync with the algorithm and you're thinking like the smart money, right? You see this as smooth highs, meaning these right here are relative equal highs, and you see a pool of liquidity sitting right there, right? You see a pool of liquidity, pool of liquidity sitting right up there, right? So when you see a move like this, where you hit it and you sell off, right? You're not being tricked by this here to get short, because this is your target. You, as a smart money trader, you know that Picasso lives right there. You know that's where Picasso stayed. Why? Because you got them smooth highs. You got a pool. Well, I wrote pool it. You got a pool of liquidity sitting right up there. So you're not getting fooled by that to try to get short. Yes, in hindsight, you see it could have come back down and you could have made a little quick profit. But as a smart money trader, we buy in the discount and we sell in the premium. Since Picasso lives here, we're trying to buy in the discount. We're not trying to sell in the premium because Picasso stays right there. So we map out our price leg, we map out our dealing range, we map out whatever we're trying to trade off of at that time, and we see that. Let me get the slop off the chart for you. Move slop. Right? Let me close some of this other stuff out of the way too. Wrong thing. Well, still look a little junked up, but we'll make it work. Get out the way, midnight line. Oh, no, midnight line good. We're going to leave that in there. Okay, so we have determined that Picasso lives up here. Right? By side. We determined Picasso lives up there. Let's do this. 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 Where is it? Get out of the way. Let's do this. Boom. Like that. So when the chart looks like this, we have determined Picasso lives here. We have mapped out our dealing range. Okay. So we see a fair value gap there. We see a fair value gap here. Somebody put in the oh, wait a minute. Okay, somebody type in the chat which fair value gap we're going to mark on our chart. Which one are we going to mark on our chart? Here's the context. Picasso lives here. This is our dealing range. This is the high of the range. This is the low of the range. This is equilibrium of the range. We have a fair value gap here. We got a fair value gap there. Which one are we going to mark on our charts? Only 3 people responded. It says that it's 38 people watching and only 3 people responded. 1, 2, 3, 4, 5. 5 people responded. Let me see if Laverne types something in the Discord. Okay, so we got a 1, a 1, a 1, a 1, a both, a 1, and a both. For those that said 1, tell me why you said 1. And for those that said both, tell me why you said both. Give me the Cliff Notes version of it. Third is expansion candle. Both would be marked. Both would be marked, but I wouldn't want it to go to the second one if Picasso was above. I'm gonna come back to that. 2 is the breakaway gap. If it pushed through the first one, I'm waiting to see what the second one does. So I don't expect to go back and be okay. 1 will take us to the discount to go back up to the relative equal highs. I'm glad you said that. I'm glad you said that. This right here, it consolidated, so I wouldn't want it to go down to the second fair value gap. This right here, Michelle Tucker, right? You got the whole thought process summed up in this one statement, right? But you, me, and everybody else in here right now, this used to be my mindset, but everybody in here who responded was responding to the opposite of what you are saying, right? With the exception of Rhonda and Lump, who just got a bunch of junk on their chart because they're gonna put both, right? So we will mark the second one. We marking number 2. Why are we marking number 2? Let's read what Michelle said. 1 will take us to go back. 1 will take us to discount to go back up. So one is going to take us to, what in the world? One is going to take us to, what's going on? Get out of here. To the discount to take us back up. We want to buy in a discount if Picasso resides above the buy side. We buy in a discount, we sell in a premium. Number one is in the premium of the price range, the dealing range. Number one is in the premium of the dealing range. Okay. That's the first thing. So we don't want to be buying in the premium. We want to buy in a discount. If price comes back here to this equilibrium, to this bullish breaker, and goes on without us, that's fine. Because when you're bullish, equilibrium can act as a discount. That's fine. But when there's a imbalance in the discount, we want to be buying in the discount. If there was no imbalance down here and it came back to equilibrium, then it would be cool to say, hey, we're marking out one. Right? But since we got an imbalance down here, we want to mark out two because we want price to come back to the discount to give us, as the smart money, an opportunity to attack the buy. We've been waiting to attack this buy side from way back over here, right? Remember, this is what we were focusing on, right? That's what we were focusing on. Buy side liquidity, right? That's what we were focusing on. Okay. This was the bait for the retail because it didn't push through it. This was like putting a little gator bait. This was the lure, and this was the gator bait, right? This was the gator bait lure. Why? Because we touched it. Ooh, that's strong resistance. How can you tell? We displacing off of it. We displacing off of it. We even got an expansion candle on the third candle. That means price gonna go low. We coming to attack this low down here. I'm gonna get short when it come back here. Right there. That's the gator bait. Lure you in. One will take us to the discount to go back to the relative equal highs. So if you understand that one, right? So that means you're saying that you understand that one is going to take you back to the discount to attack the relative equal highs. This is the one you want to have marked on your chart as your trade idea. Right? That's the one you want to have marked on your chart as your trade idea. Hence this right here. Right there. Hence that little trade idea over there. So correct thinking in the understanding of it, Michelle, and incorrect thinking for everybody for wanting this one to be the one that you mark. You don't want to, if you're bullish, right? You don't want to waste your time marking out the premium PD arrays. They're just going to confuse you. You want to look at the discount PD arrays. Okay. Especially in this case right here, when the London has already given you the Judas swing. The London has given you the Judas swing, and it did not take the liquidity. All right, let me show you what I'm talking about. Get rid of all these brushes. Don't need that. Okay, so the London, excuse me, during the London here, right? So check it out. During the London, right? We come up and we manipulate this high right here, right? We manipulate the short-term buy side. Tim, what do you mean you manipulate the short-term buy side, right? We hit it and we reject off of it. Hey, Michelle, get off my screen. All right. We would hit it, we reject off of it. Okay. We come up and we don't take out that buy side. And then we immediately sell off and we take out this sell side. Right? Take out this sell side. Okay. Once we take out that sell side, did we take out this sell side too? Let me see. Let me see if we took out this sell side. No, we kissed it. All right, we kissed it. All right. We created a equal low right there. We kissed it, but we came down and we took out this sell side. What sell side is this we took out right there? This sell side right here is a prior session low, right? This low right here is the 9:15 p.m. low. That's the low of the Asian session, right? That's the low of the Asian session. So during the Asian session, we opened up. We're 6 o'clock right here. We opened up here, right? And we immediately sold off. And then 8 o'clock, where's 8 o'clock? Right there, right? When the Asian opened up around this time right here, around 8 o'clock, something like that, we make this low and then we go up and make this high at midnight, right? So we come over here after midnight, we manipulate this high, and then we immediately sell off and take out the prior session low. As soon as we take out the prior session low, right, we turn back around and shoot all the way up and kiss the high, right? We shoot up and we kiss the high. So we don't take it. We just go up and kiss the high. So this right here is Le Judas, right? The London had given us a Judas swing right here. Why? Because we came down, took that out, came back up and took that out. Right? Y'all know a classic Judas swing, right? You go down and reverse immediately. Boom, boom. Right? And this right here, if you get into like the daily profiles and all that, you got the London delayed protraction. You know what I'm saying? Why? Because you got the Judas swing here between 3 and 4 is when you got the protraction right there. So you got all this do. So the London protraction, you will get the Judas swing between midnight and like 2:30. The delayed protraction, you get the Judas swing like later in London. And so you got the Judas swing later in London. So that's the delayed protraction daily profile. Okay. So London has given us a Judas swing and it made relative equal highs. So we got the understanding that Picasso resides up here. We got the understanding that London has given us a Judas swing, right? And did not take the high, right? We got the Judas swing and we did not take out the buy side, should I say. It did not take the buy side. Okay. So when now we got our dealing range because this low took out sell side, this high took out this buy side. So we got short-term sell side, short-term buy side taken out, right? So inside our dealing range, we're now coming back into the range. And when we're coming back into the range, this first imbalance right here, this first imbalance right there is in the premium of this range. So we're not trying to buy in a premium, right? We sell in the premium, we buy in discounts. We sell in the premium and buying discounts. So we're not trying to buy off of here. We want to buy in a discount. Okay. Next thing, we're coming back. And also, when you buy in a discount, right? Let's go back to week 2, I think it was, relative to the open, high, low, and close. When you buy in a discount, where is it preferred to be buying at in relations to the open, high, low, and close? Right? Put it in the chat. We sell in the premium and we buy in a discount, and we prefer to be selling and buying at what comparison to the open, high, low, and close? Put it in the chat. I've eaten both of my toaster strudels, and now my milk is warm. Warm milk is gross. Yes, below or above the open. So if you're buying, you want to be buying below the open in a discount. You want to be buying in a discount, but it's preferably below the open. Okay, so looking at the chart here, right? Yes, above or below the open. Looking at the chart here, this midnight line. What is the midnight? What's the significance about the midnight line? What is that? What is significant about the midnight line? What is significant about the midnight line? Laverne, you all up in the Discord. You could be unmuting and talking. Don't be giggling. You could be unmuting and you could be talking. You could be saying everything that I'm saying.
I know, but I love to just watch.
Okay.
It helps me remember it. And I've been away from it, and I'm like, oh, yeah, okay.
No, we talk about open, high, low, close, not magnet to price, not swing low, right? And what's the significance of the midnight price in relation to open, high, low, close? What's significant about midnight?
You can draw back up into it.
No. What is it? Like, as in relation to open, high, low, close, what is midnight? The open. Exactly, Valentine. Midnight is the open of the day, right? Midnight is the open of the day. So we got equilibrium is below midnight, right? Equilibrium is below midnight. So if equilibrium is below midnight, that means that discount is below midnight. So we're trying to buy in a discount, preferably below the open. So there's 2 big clues that if you want to get a good entry, be patient and wait for it to come to the imbalance in the discount in this particular scenario. So that's why we're not marking out 1. We're ignoring 1. We're not getting tricked by 2. I mean, the bearish fair value gap that it made, thinking we're going to go to this low, right? We're going to wait for it to come to a discount, to the imbalance in the discount. And then if you want to look for your confirmation, once you get there, if you want to treat this as an anticipatory reactionary point because you're skittish about just jumping in when it comes to it. Nothing wrong with that. Be prepared to miss more trades. I do that all the time. I miss more trades because sometimes I want that extra confirmation. But in cases like this, when it's during the same trading day, right? It's 9 times out of 10, it's just okay to take it when it comes back to your predetermined area because it's the exact same trading date, right? You got the Judas swing in the London. Price is coming back to a discount below the midnight open, and it's coming into an imbalance. So that's why we're not marking 1, we're marking 2, and we're looking to trade off of 2 to attack the buy side because we've determined Picasso lives there. The dealing range is set. Number 2 is in the discount. Number 2 is below the opening price. And as you see, when price moves forward and it comes and it touches that fake me out does exactly what Michelle said. 1 was going to take us to the discount, right? So 1 took us to 2 just to take us back up and take out the buy side. Just like that. And this teachable moment has been brought to you by insert ad here. Hey, man, I know we didn't really talk about overnight price action, but hey, I felt like doing a teachable moment. And there you go.
This is good. This is good.
You're welcome. Laverne said this was good if y'all couldn't hear. Laverne said this was good. Here to learn and share said fire. Fire, fire. Hey, man, that's all I got. Unless somebody got something for me. Let me see who in the chat. Let me shout out the people in the chat. I see Lump in the chat. What's up, Lumpford? I see Here to Learn and Share in the chat. I see Rhonda in the chat. I see Buenos Dias, Valentin. Buenos Dias. I see Tish in the chat. I see AR Cooling in the chat, the man with many names. I see Deborah in the chat. I see Seawalk in the chat. Michelle Tucker in the chat. Kareem. We can't forget Laverne. Laverne is in the Discord. Laverne is here. E-Rock in the chat. Sanjay in the chat. Cheryl, I ain't seen Cheryl B in forever. What's up, Cheryl B? Cheryl B in the chat. Who else? I said Lumpford in the chat. Who else in the chat? Hydro Cuzzo in the chat. Who else in here? Witchblade in the chat. Oh yeah. It's recorded. This on the public channel. So yeah, you can send it out. Send it out to everybody. Is what's the name in here? What your buddy name is? Is he in here? I ain't see him. Wait a minute. I know that thumbnail, but that name ain't clicking. But what your name used to be? Fred. Is Fred in here? I ain't see Fred. I know that thumbnail because I remember the Batman with the I think the sister behind him. I remember that thumbnail. What your name used to be? Your name ain't always been that right there. I ain't know because I. But what's up? You in the chat? You in the chat? Hey, that's it. Who got something? Do anybody got anything? You got anything, Laverne?
Nope.
Laverne ain't got nothing. Do anybody got anything in the chat on the YouTube? Yes. What's happening? How you doing? I ain't seen you in a month of Sundays. Where you been hiding at? Yes, from France. Oui. Bonjour. Hey, ain't nobody typing that, so I guess that's it, man. I appreciate y'all for hanging out with me. It is now 10:06. Time for me to start watching the market for real. See what I can do for the rest of the day. See if I can spot me anything with some options. Anything with some options, ideas. I said I was going to start getting back into trading options again. I kind of miss it. I haven't been doing it in a while. I'm just getting this junk off my chart right now. Let me see. Turn it on. All right. Okie doke, man. That's it. I appreciate we miss Spylene. Miss Spylene. We gonna get back. We gonna get back to Spylene. I'm gonna get back to Spylene, man. I will get back to Spylene, man. Hey, anyway, to the next time I decide to jump on Al Gore's internet, man. Oh yeah, if you're gonna trade, please trade safe. If you're not gonna trade, please take a copious amounts of notes, so that you can go back and study what you saw today and apply it to your future trading endeavors. To the next time I decide to get on Al Gore's internet and share my thoughts. Y'all be safe on these trading streets, man. It's your boy Aranya Grande. Gone, man.